Good morning, everybody. Welcome to On the Open here at MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. And the European markets, they opened up down early in the session, but as we will note, we had two things that occurred. Super Mario came out and quelled some of the fears. He basically came out and gave a speech after the Fed minutes were released yesterday afternoon that shook global markets with what seems to be a pretty hawkish potential stance as far as the Fed concerning how they're going to unwind their balance sheet. But Super Mario, ECB President Mario Draghi, came out and said that they would need significant confidence. Those were his words. Significant confidence to change any of the current course of action that the ECB is taking as far as their monetary policy. That firmed the markets up, and we saw that the markets on the open did bounce off their lows, and you can currently see the DAX right now is down 18, but well off of the worst levels. What's notable here on this session, it tagged its 20-day moving average and has bounced off from there. So the bulls were knocked on their heels early in the session after what has been just a grindy little consolidative pullback here. But that 20-day moving average on the DAX, which happens to be right at 12,112. That's the area that the bulls are going to have to maintain on the short-term basis. Otherwise, you're going to start to see action turning towards the 50-day, which is right around 11,920. So we're going to watch those levels very closely in Germany. What is weak in Germany right now is basically autos. We continue to see that banks and autos continue to be under pressure. What's also notable in Germany is the European finance ministers are getting together and they're trying to develop some sort of bad loan type of complex. Now, in the past, Germany has said that they do not want to have anything to do, nor do they think that it is a good idea to have a bad bank segment or institution, but they are looking at and will support discussions on some sort of bad loan solution for the EU zone. It'll be very interesting to see how those conversations go since their past support has not been there for such a facility. In the UK, you have the FTSE trading now down 30 points. That's 0.4% at 7,390 cents. It sliced through its 50-day moving average. Now, typically, I would say that the bears are starting to gain some momentum. But what's notable here is that as that was occurring, that just gave me pause to say, well, why is it pulling back so much? The miners are doing well. Yes, financials are under pressure, but we have a mixed interest rate market. We just had statements from the Fed minutes that were hawkish and were shaking the markets a little bit. But really, structurally, what's going on here in the FTSE? I found out that there are 10 notable stocks in the FTSE that are actually going ex-dividend today. What does that mean? That's the date in which a stock will, if you own it, will then mark out everybody to receive the dividend. Now, the actual dividend date where you'll receive that dividend is down the road. It could be a couple days, couple weeks, a month. But the point being is that as soon as that stock goes ex-dividend, that stock goes down by the amount of the dividend. So you have 10 stocks that went ex-dividend. That basically was good for pulling back 12 points in the FTSE. So you can see of the 30 points that it's pulled back today, 12 of those are because 10 of the most notable stocks in the FTSE announced ex-dividends. And so 12 points of this. So basically you could theoretically look at it and say, okay, if it was a normal open and not an ex-dividend day, the FTSE would be down 17 or basically about 0.2%. But I wanted to point that out, folks. This is why not only do we just use these indicators to just give us some support and resistance or some transparency, but it also triggers you to go think, why is this happening? You're not just going to trust this line. There has to be something fundamental out there that's moving this market. And I found that basically 12 points of this pullback is due to an ex-dividend in stocks that are represented in the FTSE index. Okay, finally taking a look at the French CAC. Best performing index on the continent. It it came down, looked like it was going to challenge early today. The 20-day moving average, Draghi came out, he spoke. The markets have gotten back into that consolidative zone up here at 51.15, up 23, 0.4%, 4.46% to be specific. What's notable here, consumer names continue to be a strong point in the French markets. We saw that the Chinese markets were holding up, even though they had some disappointing PMI data, both in Hong Kong and on the mainland. What's also notable here, and we're going to keep an eye on this, autos have been underperforming in the French markets. Now, we've seen this in Germany as well over the last 3 or 4 sessions. I want to see if that picks up, because there could be some exporting issues. Also, we're going to watch the sales numbers. With consumer names moving to the upsides, but autos lagging, we're going to want to watch that dynamic very closely. But the French markets, and with Marine Le Pen, who had a disappointing type of debate, but the polls are not showing that they're dissuading her new supporters and the momentum. We're going to watch that political climate very closely in France as we get closer to the 23rd of April. There could be some volatility, some fireworks there. All right, folks, I'm going to be back at 9:30 Eastern Time, 8:30 Central Time here at MarketStream.live to cover everything on the U.S. Open. So we'll see you then.